Hey everybody, hope you had a great trading day. As always, subscribe to this channel, turn on notifications, click all notifications because what we go over here is extremely timely. Today we're really going to review a lot of the social media stocks, really going to get into them and what transpired today and why some moved and why others really didn't participate as much. And I think it's important to note the distinctions. So we're going to address that, but there's also a list of stocks that did act exceptionally well today, and we're going to get into those as well. mRNA hitting new highs, AMEH. So there's a lot to get through. So let's just jump right into it here. I just want to go through this very quickly for the person that asked me to look at this. This is a firm. The symbols are up here in the corner, AFRM. But let's look at this. So here's the bottom of that wick, right? So, and let's zoom in on this, on a firm. And what you're seeing here very clearly is that you're wedged in between 55.71 and 66.80. So this red bar is in charge. Now, what you have is you have a bear flag, okay? And that's why I wanted to show this. That is the top of the bear flag, okay? Or you can call the bottom and this the top, whatever works for you. So, but you see how we couldn't close above this top of this wick? See how we couldn't poke our head above there? See how we're sitting right here, right? And it's not drawn perfectly, but it's there. And you broke. Okay, this is pretty much a short setup. So I just wanted to review it very quickly. This is usually a short setup with somebody using this as their stop. I would not go near this. So, I know that you're looking at it probably thinking it's cheap because of where it was. But just FYI, I just wanted to do this one very quickly. I would not go near this stock. I would avoid this. And if you're still in it and it breaks 55.71, I would consider that as a stop. So AMD and semis are starting to catch a bid again. They're not running up like the rest of the market, that's for sure, but they are moving. And you saw some support here on AMD at the 200-day. The 8 is curling up. The 21 is up. So everything's firing in all cylinders. As we know with AMD, though, for those that have played it through all this, right, as we did up here, we know that when it starts breaking out, it usually does not last, just like it did here, right, over here. I mean, they constantly break down. So for whatever reason, you're better off buying it on the dip. I would really just watch how it acts at this 94.50 level, but this is not something that I'm going to say that you really need to jump into here. You can sit, watch, and wait. That's kind of how I look at it. I mean, I will not be buying it until I figure out what's going on here and close maybe on the weekly. And we can look at weekly charts today because it's obviously the end of the week. And here's AMD, and we can get rid of all these indicators. But, you have a bullish engulfing on the week, which is solid, which usually means you're going to follow through the next week. So I'd be surprised that you don't have a pretty good week next week. What that entails, obviously, we don't know yet. But this is pretty positive, right? But you still have this whole level right here. So I would like to see a close. I mean, to get super technical, which I do get, I'd like to see a close above 95.25. I'd like to see a weekly close above 95.25, right? We kind of had one here. So that's what I would look for AMD. AMEH, this never fails. You get these people that come out and issue short reports on the stock. I think this one was Hindenburg again. They just jam people into these things and people short them thinking that, they know what they're talking about. And sometimes even if they're right, it doesn't really matter. You have to understand something. If they're short and you're short, who do you think's covering when this goes down, right? I mean, these people are not putting together tens of thousands of dollars in research so that they can give it to you for free just because they publish it on the internet. They're already short. So that's why you see these squeezes. And you saw the same thing you saw it with this too. If you just, and you can literally go through the list and just pick the bottoms on these things from these guys that issue short reports. And, it's how Wall Street Bets actually got pretty prominent because they were calling BS on it and they were right. And a couple of them you don't see do it as much anymore. But Hindenburg did it again to people, and, they just got flim-flammed. And, apparently what they're saying is not coming to fruition, is it? So what you have to see here is you see this wedge, you see this break. Here's when everybody started shorting again, because this time they really think that it's going to go. Opens at the low of the day, takes out a high. I wouldn't go near this right now. The only way that you could trade this, in my opinion, is by using like 15-minute charts and looking for pattern recognition, right? So you could come in here and go, okay, well, here's 15-minute bar. I didn't really take out the high of that. When it takes out this high, I'll buy it. And then buy it, and your stop's either under here, or, some people even use the low and take the risk. It doesn't really matter, whatever works for you. And then just grind up, right? You could have just said, for this whole trade, I'll just use if it breaks the wedge. I mean, it's so clear. Look at the wedge. I'll just use the wedge as my break. And then you'd make a decision at the end of the day if you're going to stay in and see if it gaps up for you, or you just lock in your profit. But you really can't. You really can't, because what if news does hit? What if something is wrong with it? What if it does come in? I would just argue that when you see these guys come out there and issue reports on Twitter for short reports, okay, just be careful. I mean, this was when Hindenburg did the short on DraftKings, right? And from that level up, what did it do? 30% in a week. So this is what happens. Came back and gave you a shot to cover. People covered, and now we're going back up again. So just keep that in mind. When you read these reports, take them with the grain of salt, especially if you're not paying anything for them. Just take it with a grain of salt. I can't stress that enough. So I have way too many lines here. Let's get rid of these segment lines, and let's just start digging into what's going on here. So you're riding that 200-day. You've been riding it down here. You're trapped between the 50 and the 200 on this stock. And what we're going to do is just take a look at this. See how you're trapped in there? I really keep waiting for these to move. I keep waiting for BNGO to move. I keep waiting for PAC B to move. I feel like I'm the only one waiting for these to move, but they're not doing it. So you're trapped between the 50 and the 200-day. I wouldn't do anything until it at least gets above the 50-day. EXPI is one that I really like. Just stellar growth across the board, right? I mean, just constantly, if you look at these revenues on these quarters when they're coming out, the revenue growth is just absolutely staggering, right? Earnings aren't so reflective because they are just a growth company pouring everything back into it. But get above this 200-day and get above this 41.41, and I think it goes again. I really do. But right now, small caps have continued to underperform, and I think that's going to continue. This is a small cap name. But you definitely can't touch it till you get above that 200-day. It's using it as resistance right now. So Facebook's going to be the first one of the social medias, obviously, that we're going to get into tonight. And I just want to take a moment talking about this. So there is something you have to understand, that one of the reasons why some of these stocks went up more than others is because their models are similar to Snap. Some of these companies have what's called supply side platforms versus demand side platforms. Facebook, Google, Snap. I'm trying to think. There's one more that I'm missing. Roku. They all have that. And we're going to get into Roku and what's going on there. But that platform was the one that Snap had. And based upon that platform and the performance of that platform and being able to raise the amount of money that they did on their advertising is what's driving this. So that's why some of these stocks are really breaking out today and others are kind of like, eh. So just keep that in mind. But let's get into it. So, and that's what, I mean, like you could see the difference, right? Like we saw, Twitter hardly moved, off the open. I mean, it opened and went down. So we'll get into it. But what you're seeing here, right, is a clear and classic breakout. 358, 57, we broke out, and then we just kept riding high all day long. And that's pretty classic. Now, you do have an issue here just to address this. You have earnings coming out, right, July 28th. Just be aware of that if you're in here. You're taking that risk. You're going on the assumption that they're going to be great, and you're going on the assumption that when they are great, that its stock's going higher. And I just want to point this out. This is the last time we broke out on earnings. What happened? Right? This is the last time we had earnings. They were great. What happened? Right? What happened? So just because the earnings are great doesn't mean the stock's going to go up. You would think that that's the way that it works, but it doesn't always work that way. So just consider that for a moment. You need two things to happen when you're playing earnings. You need the earnings to be great, and you need people to buy the stock. You need those two things. If you don't have either one of those two things, your stock's not going higher. So it makes it a lot more risky. So whether or not you play it for that, that's fine. Right now, I wouldn't be buying it until I cleared up that wick area. 376, it looks like that. Well, that looks a little high, doesn't it? There we go. That looks about right. So 375.30, is that correct? Let's take, 325, 375.25. So what you're seeing there is you bump right into that, right? Now you come back down. Look, let's see what happens with it. Right now, I'm very comfortable with the position, and we'll see what happens in the earnings. You can get up to here. You can get up to $400 fairly quickly. But based upon the the ad price raise from Snap, maybe that's going to do it. Maybe that's going to be a driving force, and we're seeing a secular change in these stocks. That could be what's going on here in social media stocks in the right names. So let's see what happens here. But I wouldn't buy this until and I would do it on a trade only above 375.30. So FTNT, I just wanted to point this out very, very quickly. This stock has been an absolute monster, and it's been in a trading range. And now you see how it's just pulling right out of that trading range. Like it just doesn't care anymore. And you can actually throw in the 5 and the 8 and just see how you're just riding them all the way up. It's pretty darn impressive. So if you're in this, I would just hang out for the ride. I mean, am I chasing it up here? No, I can't. I'm too far off a base. But you could find a way in by using a shorter time frame. But this just looks absolutely amazing. I mean, it's just done exceptional. So let's look at the weekly. Yeah, I mean, that's just crazy. I mean, you just broke this level and did nothing but go up since January. That's all you've done. You had one bad day here or one bad week here, but that was it. It's a monster. I mean, and even look at this bar on the weekly. You opened at the low, closed at the high. I mean, it's a huge move. Congratulations to those that are in it. It's very hard for me to chase these things with the way that I trade. I can put on a shorter term time frame, but, I don't know that it's really worth it. So Google is one that obviously benefited today from the Snap news. And I just want to point this out. Okay. I do think that it's very possible that we are going to go through some kind of secular change in advertising and that these stocks are going to go a lot higher. I think the right ones are going to, I should say. And I think Google's one of them. This break is pretty big. We've only had it happen like once here, right? The whole way back here. Look at this on a weekly on Google. Like, let's get rid of these indicators. We all know this is Google. And let's get rid of these lines. I mean, you can leave the lines. You see the flag, the breakout of the flag, and then you just went, right? Now you're up 600 points. I mean, it's just staggering, the moves on some of these things. But look at this bar. I mean, this is just off to the races. I mean, this is going to be really, really hard for this to come back down. I mean, look at that. Look how it respected that. The low of the week respected that weekly line. It's crazy. So what you have now is if you duplicate this line, right, it should kind of fit right in here. And it does. So, and you could see how you're wedged right in here, and then you're riding this up and trying to here. And then you broke out of it up here, in my opinion, because I don't think that you can really say that this is it. And I don't really think that you can say that this is it because it doesn't take into account everything that's here. And you need to have the same trajectory on your lines or you don't have a true channel. So you're breaking out of this, right? Very similar to how you're breaking out of it where? Over here, right? So based upon that, I think this can keep going. I really do. And when you get moving like this, it can be a parabolic move. Now, again, right? We have earnings all coming out right around the same time. Apple, Microsoft, Google, Facebook, they're all coming, right? They're all coming around the 27th, 28th. So it's going to be an enormous week next week for earnings. Just keep that in mind. But I do like this. Whether or not you'd buy it before earnings or after earnings, that's up to you. For me, I always do it after if I don't have a position in the name. The reasoning behind that is relatively simple. I walked through it before. You just don't know what's going to happen. And we just don't want to, we want to limit uncertainty as much as possible. I just wanted to show this very, very quickly. This is IMNM. I was asked about it. I just want to point this out. Okay. You have this run up, you came back down and you collapsed. If we throw this up here, let's just do this real quick. Okay. And let's throw the volume in. Okay. All you had here was everybody that's been accumulating in here. All they did was dump and get everybody in this thing. That's all that happened. Right. And look where you dumped to. Move that up for you. Look where you dumped to. Okay. So for what reason do I want to be doing this, right? I don't want to be in this. That's why I'm pointing it out. If you're in this, my advice, unless you're waiting for some fundamental news, get out. So I was asked a lot via Twitter and in messaging and in our community about airline stocks. And I just really want to address this. Instead of going through each individual one, understand that they trade as a group, right? And they've been trading as a group. And then there's nuances to the group. So like, here's one nuance, okay? So ALK has one of the best balance sheets out there, right? These are value names. They are not growth names. So they trade on balance sheet data because the institutional fund manager looks at that data. So that's why it's relevant, just FYI. So you can see how this one is doing, right? You can see how this one's doing, okay? These two, JetBlue and ALK, have the best balance sheets. Now you start looking at the ones that have the higher debt, okay? UAL, American Air, okay? Like, it doesn't make any sense. So you're seeing this really big, like, this has a much, oh, I'm sorry, it's the wrong one. There we go. I'm looking at Alcoa. But this is above the 200-day moving average, right? So you're looking at these going, let me get this straight. This is struggling and has the better balance sheet. How does that make any sense? It doesn't, right? So to me, I would avoid the whole group. I think there's a very large disconnect that's going on in this space. And I think that disconnect is started back here. I don't really understand how these stocks got to this level in this type of economy. Like, we're not back. People are not, they can say they have bookings and traveling and everything else the same way, but we're just not going the same way. Look, this is the long-term trend of jets. You could argue that you draw it back further. I mean, there's another line here, but I don't really agree with this, but I can show you this, right? But I don't really agree with that one. But either way, the way that you're coming in, look, and let's just get rid of all of it, okay? It's just straight selling. And I tell people this all the time. You see that's on a 45-degree angle? When you see selling that's on like a 45-degree angle, right? That's institutional selling. That is not retail, right? Retail's not that orderly. We're retail. We panic. We panic. Well, we don't, but you know where I'm going with it. We're more emotional. This is just sell 1% of my portfolio that's in airlines every single day until I'm out, right? That's what this is. That's the conversation that these guys are having with their brokers. And you don't want to be involved in this. I mean, it's pretty clear that you are breaking, like, I mean, here was another level of support that's broken, right? See how it flipped to resistance. Like, you just don't want to be in these names. I can't stress it anymore. I know people are looking at these names and seeing all of them like, yeah, your Jets is below the 200-day. If you really wanted to buy them, which I wouldn't do, you have to buy the ones that are holding the 200-day moving average, right? When they hold that line, that's where you buy them, because at least you have higher relative strength than, Jets, which is below the 200-day moving average. But again, I would argue that there's much better places to put money. It would not be surprised me at all to see these take out this and start filling in some of these gaps from November and December. Wouldn't surprise me in the least. They're completely over levered. The only reason they got up and running was because we funded them again. The government funded them again. So it's not like they're the healthiest stocks in the world. So there's a lot of problems here, and I'd be very apprehensive in owning them. So this is Moderna, mRNA. And what we saw here was, just left these in. This is when we broke out. And so I left the fib level in. And I think it's pretty interesting when you look at how these levels go now, right? So here we were, and we were saying we can get to 352, 350, okay, where'd we get today? Well, we came within $1 of it. So, I would strongly recommend learning how to draw fib levels and drawing them correctly. They are a huge, huge help. And you can see that even when, you marked up here, you can see how it lied right in here perfectly, how it lied in this one. They do, if you know how to draw them, they're a great tool, but you have to learn how to do them right. So keep that in mind, play around with them, but learn how to actually do them, not just put them on the, the low and the high. There's more to it, and I don't want to get too into it right now, but the question is, what do you do now? Let's see what happens. I mean, I'm absolutely shocked that this stock came down and then just went back up again, but it looks excellent and it looks like it's going to keep going. So if you're in it, keep holding it. There's really not much more to say or do with this one. It's just that they are just rocking and rolling. Net, I get asked a lot about. My concern with net is this upper channel. See this upper channel line? That's my concern. So maybe if it flips it, I'll take a look at it. I really, at this point up here, I'm just a little concerned about it. I'd like to see this. I'm very close on this one to really starting to like it again. And we just did something today that didn't make me want to get in there, right? And this is why you always wait. And we always talk about this, right? So here was our support. We tried to get through. We couldn't. What happened today? We tried to get through. We couldn't, right? So it pretty much tells you where your buy price would be on crowd, right? It would be 272.55. If you can get above that, then clearly you have a shot of staying above all this. You have a higher degree of probability, and that's all we're really doing as we allocate capital, looking for a higher degree of probability. So NRXP. So this is just an interesting one, and I was asked to cover it, and I think it's kind of, let's just see what's doing, if anything crazy after hours. 28 after hours, and where'd we close? 26.25. So you're still making money even though the market's closed if you're long this one. It just decides it's a honey badger, it just keeps on going. So there's not really a lot you can say about these. You can obviously see how they're manipulated, but you do have a trend line here, right? You see how you keep hitting this level all over. And you are above the 200-day moving average. And this volume is absolutely off the charts. Like, what is, I want to look at this because it's just absolutely insane. What is the relative volume on this? Let's just take a look. So, yeah, sure. So on this day, it was 20. On this day, it was only 13, 14. So obviously this is being manipulated, and it's been being manipulated. But if you can get in there and catch it for the ride, go for it. Closing below the 200 days is going to scare a bunch of people away. Just use that as your guideline for now. If you want a real quick back of the envelope way to look at levels, I'll just show you a real quick way to do fibs. You pick that point and you pick the most recent low, right? And you can kind of see some fib levels that are in there that you should be watching, okay? You can kind of see how it actually even fits in some of those the way that I did it, right? It's kind of interesting. To me, it's interesting, right? You just pick that low, the more recent low, and then you pick the high, and then it's so fascinating to me because you can see, like, you don't know it's going to land there, and then it does. And then you don't know it's going to land here, and then it does, right? It's just crazy, but there it is. That's math for you. NVAX, I was asked this today, is this a long-term play? I think it's becoming abundantly clear that people are choosing BNTX. I mean, you have two countries that have come out and said now that they're going to use it. And as for their boosters or as their preferred method, I have to read the article in greater detail. I try to stay away from fundamentals here and just talk technicals. But that said, I really think that you need to to not, I'm not saying throw the baby out with the bathwater, but I can't get above this level. Really? Like, do you see what's going on with all the others? I mean, this is just, I don't know, just only went up 50% in the in a month. I mean, it did get added to the S&P, and I think that's the way you see the majority of it. I mean, we were talking about this today in the community. I was laughing. Like, everyone's like, oh, it's having a bad day. I'm like, having a bad day, right? Where did we close? We closed down 1.5% after this move. And then you look at this, right? And I think that this has tons of potential, but there's a trend line here. Maybe we do slow down. But to get back to what I was asked about the NVAX, look, you are breaking this level, right? But that said, while you're breaking that right on that line, what else are you doing? And I'll clean this up, right? Here's your flagpole, right? So you're building a flag right there, but you're stopping right at this key level. You can't get over this red bar, right? See that red bar, the top of that red bar? You can't get over it. You're trying, but you're having a hard time. So let's see what happens with it. PAVM. So PAVM is one where I just wanted to cover for whoever was asking about it. So sometimes I'll do this because the person, like, they're in and maybe they got a tip or whatever. And I just think it's to be clear about stuff like this. Like, look, I don't know why you're in, and I always call them little guys, but I don't know why you're in this. This is the only positive thing that I can tell you is that see this trajectory and how this trajectory is changing, right? And how these lines are getting higher and higher. That's what you want to see technically. But I peaked here. I tried to get above the 659. I peaked there. I'm above the 50-day, but you see this bar right here? Let's see if there's any events coming up now. See this bar right here that I'm on right now? That's a long-legged doji, okay? That signifies uncertainty. I would be very careful here for a couple of reasons, right? First, you stopped before you could even challenge that red bar, okay? Second, you cleared this, but you can't even get up to here without getting a wick. So it tells you that you have more selling. Third, a long-legged doji basically tells you that you have uncertainty. Okay, fourth, you have another doji the day after it. So it's not like that even got negated. So fifth, you see the way you're rising up and you have a rising channel, right? So breaking a rising channel usually ends with a straight rope down. Just be aware of that. This is not something that I would be in. And, if I broke the 50, that would be my stop. I'd be out of it. So Pins finally decided to participate today, but, the other stocks that, were more comparable to Snap and, the way that they do business seem to do a little bit better. I understand that, like, I'm going to buy this one too, because, they're not because the one thing about Snap and Pins is there's not as much political jargon on there. And people are kind of pulling away from those kinds of social media sites. If you start looking at it, like when we get into Twitter, if you look at daily average users and monthly average users, they were down. The reason Twitter did so well is because, and if you're on Twitter, you'll notice it. We're getting a lot more ads than we've ever gotten before. So, but look at this 77.89 level. We got right to it and rejected. You didn't see that with Facebook. You didn't see that with Google. You didn't see that with Roku. You didn't see that with Snap. Why would we play with this one? It doesn't make any sense, right? To me, it doesn't make any sense. Why would I try to open here 75 and go get $1 when we were pulling $10 out of Facebook today, left and right? I mean, these trades were so easy today. They were like layups. But when you see this, you can kind of see I may have a problem, right? Because I can't get above. I can't even get into the gap. And I'm still not even in an upward trend. I'm actually in a downtrend if you really want to get super technical, right? So, not something I would be chasing here. Where would I have interest? Get me back above 81.77 and maybe I'll revisit it. But it's very clear which preferred method is working right now for advertisers. Let me rephrase that. It's very clear what type of advertising is working for publishers that are getting the advertisers on their site. That's a better way of phrasing it. So look how you're rallying this up on the 50-day and your 21s right here. This is why I wanted to show this. You have no volume whatsoever why this is going on, right? So for the person that's interested in this, I see what you're looking at. I would just argue that I would wait maybe a little bit and maybe see if you get this up here, right? Maybe you get this push to 284, maybe wait for that before jumping in there. So this is QDEL. And I mentioned this earlier. I like this, and it's rare for me to really get into a stock that's below the 200-day moving average, but it's doing everything right. Okay. So you have down here, if you're super technical at this low, right? You undercut it. And what'd you do on that undercut? Right? What did you do right there? You encapsulated the bar. So double bottom, and I undercut it with a bullish engulfing. Bottoms in. Okay. Now, when that bottoms in, I have to get above a previous high in order for that bottom to be considered a double bottomed and in. And where does that take me? Takes me right here. Okay. Tried to break out, fall down, boom, tries to rally, right? It's getting there. I mean, it's really getting there. Look. 135 now. And look at how these, see the widening, and this is kind of important. See the widening of the differential between the 50 and the 21? Those widenings, what you want to see. See all this volume coming in? So it's almost like somebody knows something and they want to be in before earnings, the way that this is being acquired. Very quietly. And I wouldn't be surprised to see the majority of the volume at the end of the day. Let's just take a look and see if I'm right. Yeah. So you start seeing spikes like this at the end of the day. And what that is that's institutions that don't want to show you the full average daily volume spiking. Because if they show you that spiking, people like you and I are going to go out there and we're going to buy it because we're going to see that. So you see it, Here's July 23rd. What did you see at the end of July 23rd? You saw buying. Okay. So let's go to July 22nd. What did we see? Saw buying. Okay. So it tells you what's happening here, right? You're getting it, right? Someone's buying 100,000 at a clip at the end of every 15 minutes of the past 3 days. So somebody clearly is legging into this trade in 100,000 share blocks probably. That's just my opinion. But so based upon that, that would take me to what? 170. So if I can get to, I might be able to get to 170 before this date, before August 5th. I don't know that I would stay in for earnings, right? This didn't go so well. This didn't go so well. This at least didn't fall apart. So Roku we're going to talk about. So a lot of people didn't understand this. And I personally was very busy this morning and didn't grab this off the open. But we covered it in the pre-market video. And it's one of the reasons why I tell people to subscribe and click on notifications, because every day we do a pre-market video to go over stocks. And we covered it. And I did state what I was looking for, but I didn't make calls on this till later in the day. But you could see like 430, 82. When you got above that wick, that was it, right? You're above this channel, you're above the wick, and I expected it to go. I don't care who you talk to today, what quote guru, no one saw this coming. No one saw the magnitude of this move. Someone later will, be a Monday morning quarterback and say they saw it, but nobody saw this. What's very interesting about this move is you see all these wicks in here, right? Everybody's waiting for this to break. Okay. Maybe you should wait for it, or maybe it's telling you the magnitude of this move over this. Right. And when you start understanding how to look at RSI, right. And I have a video on RSI that's just very basic. When you start understanding RSI, I can already tell you that this is going to wind up breaking this, in my opinion, by reading a chart. And that's just by looking at this break and the trajectory of this plus this volume, right? So I'm overlaying several different indicators, but dollars to donuts, we're going right through this. That's my opinion. Now you might pull back before you do it, but those wicks are not going to be able to stand a chance versus what's going on here, right? This is way too powerful of a move. So I expect this to go higher, and frankly, I expect it to get back into this channel. So this could be, that's what I was trying to explain today. And not as eloquently as I'm trying to do right now. But, when you start looking at their moves, like what they did in May, and they were explaining it, in May, they took back their Roku originals. Guess who gets to advertise, right? Guess who's in control of their advertising? So you can see how the pieces are kind of coming together. And again, I try not to get too fundamental on this. I try to stay technical, but that looks to me like it's going to rip. A caveat, disclosure, I have positions in this. So I do think that this is going to break out, and I do think it's going to be a monster winner. I think it's just getting started. But maybe you don't want to hold it over the weekend. Like, I don't know if you can play the game where you buy it at the end of the day and then you sell it off the open on Monday. Sometimes that works. Sometimes it doesn't. What if Roku decides to do a secondary over the weekend to raise capital? I mean, anything can happen. They don't need to do a secondary, but you know where I'm going with it. Anything can happen over the weekend. So they could buy a company, right? Because now they're where the stock price is. That would, could be dilutive. Anything can happen. You can have uncertainty. So why take the risk over the weekend? Come in on Monday, find a spot, but find a spot, because this is not normal. This is a very large secular change that you're seeing. And you're seeing it in Facebook. And if Facebook has good numbers based upon having the same modeling subscription that Roku has, yeah, I mean, this could really go. And you see what bar is in charge here, right? You see this long red bar still in charge. But look, what do we have here? Right, on the weekly. We just have a weekly engulfing. So I would be all over this. I'd be paying attention to it. It's crazy. I tried to get in this before, a little cheaper, and I just kept getting stopped out, 340 range. And it just kept stopping me. But, it's here and I'm in it and doing well with it. But I do think that it's just beginning. That's the point of it. It doesn't really matter, how I'm doing. I think that this move, and yeah, it's had a huge move, but this is, to me, is just beginning to move. Shop's one we just added to the newsletter. And let's just go through this. That's where we had it in the newsletter, 1600, 1560 stop. I wanted a tight stop on it, and I'm just going to walk you through why so you can understand the process. Here's your break. On this breakout bar, if I couldn't hold above that wick and I was going to take out the low of the day, why do I want to be in this trade? There's no reason. There's a million other times that I could turn around and buy that stock, right? This is not like this high beta stock that's going to go up 10% in a day. This is very rarely something of this size going to pull a Roku. I mean, you look at this company and realize it could be $1 trillion company someday, but it's, I think I forget the market cap now, hundreds of billions, 200 billion. I mean, it's huge now, right? So you're not going to get that enormous move, but look what it's doing, right? So it's telling you that it's going higher. That's how I'm looking at it. It's definitely telling you that it's going higher. And I think we'll get to that 1800 level. And we really don't need the RSI now. So let's just keep going through these. Snap, there's not really much to say. They just knocked the cover off the ball on every metric. And I can get rid of these events. I mean, look at the volume today. You haven't had volume since you had this breakout. And what was that breakout? Just happens to be earnings again, right? What happened this day after earnings? Even here, we kind of held in there, but this was just stellar, just absolutely stellar. And it's very hard to ignore. And I don't think that you're going to be able to ignore this and much longer, frankly. I mean, everyone's got to be looking at this now. That is a very big move, bullish engulfing on the weekly, breakout on above average weekly volume. I mean, it's got everything that you want to see. So question is, where can it go from here? This is your channel. So can this be a $100 stock? Sure. There's absolutely no reason why it can't. None. Absolutely none. So I do like it, but look for it on pullbacks. We added to it today. Let me walk through that trade so people can understand why we did what we did. So again, this is just a really simple trade. I'm just going to make you guys understand this. You have lulls in the market, right? So this is a 15-minute chart. And where are we seeing those lulls? We're seeing those lulls around what? 10:30, 11, 12, 1. Why are you seeing those? Because it's a lazy summer and you're seeing lulls, and it's a little lighter than usual anyway, so it exacerbates those lulls. Well, if you count these bars out, right? This is 10 o'clock. This is 11. right? 12. You see where I'm going with this? So you can kind of see how this, right? So by looking at that, you can kind of see how you start coming in. Okay. So all I was doing was just looking for a very simple pattern today. Now you see this low right here, right? Okay. What do I need to have happen? All I got to do is just get a higher high on the bar. That's all I needed. That's all I was looking for. And then just use this as my stop. And then you just overlay it with a couple different indicators. And you really don't need to use it for this, right? But you can see how this got tighter, exacerbated, then got tighter down here, right? So what's happening here on your volume the whole time, right? Is your volume getting lighter? Is the selling getting less and less? So the selling's getting less and less as the price drops. It's not accelerating. Well, that's interesting, right? So that might be a data point that you might want to consider using. So you might, you can put a line on anything. You can draw a trend line on anything. So that's an interesting data point, right? And then you could just kind of look at this and goes, well, gee, the RSI's kind of stopped here. So, and you can actually do this too, just to kind of give you even a better sense. Just because you go off a 15-minute chart doesn't mean you can't look at a 1-minute chart, right? And just get a sense of it and try to figure out like, geez, did this actually slow down over here? Well, yeah, it did kind of slow down. Actually started pointing up. So then you can just kind of then roll from a 1 minute into a 5, right? Well, we're kind of basing here. I wonder what's going on. Well, look, we're kind of turning up here, aren't we? Yeah, and then we turn up. Okay. So just those little nuances make all the difference. And you can even draw that line that we had here, right? So you kind of get where I'm going with this. So it's by overlaying these other indicators and understanding the market, right? And understanding human behavior that gives you an opportunity to get in. So then we got in, I think it's 75.60. And it's just simple trade. All we were waiting to do was for it to just go back to the high. And every dollar that it went up, I just moved the stop up $1 so that we could never lose money. Once you're up $1 on something that's like a day trade, just put the stop in and break even. Worst case, you lost your time. You move on. Next. But it did exactly what we wanted it to do. And we closed it. And people could hold it if they wanted to. It's up to them. It's their trade. They can do whatever they want. But that was it. That was the trade. It was simple. So snow, I just want to go over this one. I get asked so many times about this stock. Again, this is one that's like an abusive relationship. But here, look, bonk, bonk, bonk. I can't get through 272. There's literally no reason to ask me about this stock. I'm joking. You can always ask me about them, but there's literally no reason to ask me about this stock until you get through that level. Like none. The answer is not going to change, right? You can get excited that you have a 200-day, right? Stay above it, but get through 272 and actually close above 272. Then you might have something. Square ran into that meeting and then completely rejected this trend line. Now you have this weird bar, right? Which is price rejection right here. Your weekly might look pretty good on Square. It's definitely going to look better than that daily, right? You have a bullish engulfing here. And here's that line. We could just draw that line out. And you can see how that line's a little different on the weekly, right? Sometimes it's great to look at these weekly charts at the end of the day. I know I sound like it's funny. Someone mentioned the word nerd the other day and I was laughing, but I don't mind it. It just makes me laugh. But think about it. Like when you have a weekly chart like that, look how much cleaner that is to like understand. It's just so much cooler. STEM, let's just get into this. So a lot of people love this name. Okay. See this rising wedge? See how you broke it? See how you couldn't hold 28.18? See how you're sitting right at 26.39? These lines have been in here for months since you guys have been, and girls have been asking me about this stock. I'm trying to be inclusive with my pronouns. So there you go. Now you're below the 8. Like it's just getting worse and worse. It's not getting better. I would be out, especially if I break 26.39, I would be gone. I wouldn't be in it. So Twitter kind of did what Twitter does, right? They jam the quarter with tons and tons of ads, make it look like things are going great. They're not going great. Their daily average users are plummeting and their monthly average users are plummeting, right? So Twitter, out of all the social media companies, trades the most like journalism. And it's probably because they have the most journalists of any platform on there, right? You have every major news outlet that wants to be on Twitter. And the reason is because their format's awesome for reading that kind of content. The problem is the polarization, and people just don't want to deal with it anymore. And so you're seeing droves of people leave these kinds of platforms as well as leaving mainstream media. They just don't want to deal with it anymore, right? They've had enough. They just want to get on with their lives. And so it's kind of putting a drag on people that were using Twitter. I personally love Twitter. It's a great platform, in my opinion. It's a great way to get out there and read that. I just don't know how they're supposed to clean up all the bots and everything else that they have on there, but they have issues. And I'm sure that they'll figure out how to address those issues. Someone mentioned before, and I read an article on it where like they turn it into a fintech company. I mean, it makes so much sense if they did something like that. But, maybe they're happy just the way that it is. You just really don't know what a board of directors is thinking. So anyway, before I digress. So see how you closed, right? Here's your open and here's your close. Right below what? 72.16. Right below that wick. There's no reason to go near this stock. These other names are clearly better positioned and acting much better. I would continue to avoid this. I had a short position on this at one point today. I made a little money with it, not much. It didn't do what I wanted it to do. I'll just walk through what I was trying to get it to do, or what I wanted it to do, I should say. So I'm going to have to do maybe a 2-minute and pull this over. See this move down? As soon as it broke, that was it, right? It was very, very easy. You could have just bought the 70 puts. Comes down. I was looking for the break to fill the gap. You could either short stock on something like this or just buy puts, right? Because they're basically going to be pretty much trading at parity on the last day, and that was it. And just couldn't break down here. And then I just started every time it got down and couldn't break, I would just trim it. That was it. Tried again, couldn't do it. Tried again, couldn't do it. Just kept getting out of it. So I made a little money, but overall, it hung in there. So, but the other names that I mentioned earlier today are substantially better. Roku, I know people don't look at his social media, but we're talking about ad revenue. So, Roku, Facebook, Google. There's a reason those stocks had that type of volume coming in today. And again, you may see a secular change. So I just want to cover this really quickly. VEEV. Whoever's in this, congratulations. It just looks excellent. You're firing on all cylinders, right? Higher peak, higher peak, higher peak, higher peak, higher peak. Like it's doing everything right. Trend line. I mean, you could literally, this is like something you'd see in like a textbook. I mean, it's perfect. So this would be your support level, 325.54. If you got below that, I'd be concerned. But I just wanted to show this. Whoever's in it, congratulations again. I mean, it's just a great trade. I'm not in this one. Kind of a bullish engulfing. The body's encompassed, but not really, not fully. ZM weekly, I'm glad I stopped on the weekly. For those that have studied that candlestick pattern bar, and I guess I'll link that again at the end of this. What does this look like? Looks like a morning star at the end of this, doesn't it? That's kind of interesting, right? So maybe that's something. Maybe this is the beginning of something. What happens if we throw in indicators? Okay, so we stopped at the 21 week and we're wedged in between the 8 week. Okay, and the 50 weeks right above us. All right, so let's go into the daily. Maybe that can tell us something. So, and there's your 50-day, and we're riding that up, and we're curling above the 8, and it looks like we're going to get to the 21. So overall, you're seeing some development, but you're just not seeing it go the way that we want. I was in this. We did it for a trade. We actually made money with it. I forget what. I think it was like 20 points or something. But once you broke this 200, that was it. I mean, it's really that clean, guys, like and girls. So when you go below the 200-day moving average, that's the last bastion for the bulls. I say it all the time, right? Here you are again. Every time you break this down, it comes in. Broke it, it comes in. So maybe Peloton holds this time. I don't know. But when they break the 200, you just don't want to be involved with them. It's not worth the risk, right? So that's it. As always, if you need me, comment, email, or on Twitter. Thank you. Have a great day, everyone.